The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the December 5th fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. I believe we should be pioneers of our future versus prisoners of our past. So as we begin our day, let's always remember that life happens for us, not to us. Yes, folks, life happens for us. When we live by this principle, we can find the gift in every set of circumstance, because circumstances, they're going to happen. They happen to all of us. And circumstances like the wind. If we learn to set a good sail, we can enjoy the ride. Hope everyone had a great ride on terrific Thursday. As always, and I do mean as always, I am grateful for your presence here today. Of course, what I'd love to do is I'd love to hear from you. So go ahead, pick up that phone, dial on in at 877-927-6648. Internationally, you can reach out at 727-445-1044. Would love to hear from you, because it is Fabulous Friday, and you are fabulous. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow Futures. They're trading up 11 points off their session high after the jobs numbers came out. Of course, they come out the first Friday of every month out there. And the jobs numbers, they come out, they're compiled, and they're wrong. No matter what numbers. It is the most amazing thing that we as a financial community don't put the pressure on these guys to say that the heck with you. When you guys can get the numbers actually right, then go ahead and report them. If that means that it's 2 months ago, then go ahead and do it there versus all this revised stuff. Can you imagine having employees that do work for you? Imagine having to rely on employees. Imagine that. You've got to rely on an employee to work for you that provides you with data so that you can make decisions, and on a continuous, always ongoing basis, provides you with information that's not accurate. That's going to be revised somewhere down the road. What would you do with an employee like that? Would you go ahead and elevate them? Would you go ahead and give them more responsibility? Would you really rely upon that person? You know, there's nothing faster than the speed of trust. What kind of speed of trust can we have there? Look, I'm not going to belabor it. What we want to do is we want to go take a look at how the market responds to all this stuff, because that's what we are. We're technicians. We go take a look at the charts out here, and we go figure out what the buyers and sellers are absolutely doing out here. So let's go do that. Let's get right into it. And we've got a lot of places to start. Let's start off with the currency markets here. Markets inside the futures markets inside the stock indices, basically flat. You got the ES Mini trading at 2,071 and a quarter. As I've told you, 2070.75, a key level. We've had the market basically just hover around this area for the entire week. I don't know if I can really expect anything to change substantially today out here. I just know that's an important level of both support and resistance, and we're just hanging out there. So it's not really providing me with a whole lot of information. Therefore, how can I provide you with a whole lot of information? We see the market move down, then up, and it just really continues to hover around this area. That's not the case here as we take a look at the currency market. So let's go take a look at the euro. It's the euro futures that we're taking a look at. A couple different potential patterns out here. If, in fact, yesterday's lows get taken out, low out here. Let me put the actual data box on my screen. That would make it a little bit easier if I can see what price we're looking at. So if the actual low from yesterday, 1.2277, gets taken out inside the euro futures, what is likely to happen is you're likely to see the price move down to at least the first level, 1.2073 inside of the euro futures contract. That would be taken out at B point. It would be taken out yesterday's key reversal session out here. Right now you are trading below that B point, which is 1.2361 out here, but a lot of time left in the trading session. Yesterday's key reversal session, pretty important. Doesn't mean that it's going to change the trend out here. You really need to see a continued move higher inside of this currency futures contract north of that to occur. But there's enough signals out here that could be in the cards. Of course, if the euro moves higher, it says that the U.S. dollar would get weaker. The euro moves lower, it says the U.S. dollar is going to get stronger. So let's go take a look at the U.S. dollar index. Let's go see what it is doing. Now, I'm putting a continuous contract on my screen just because we've got more data out here right now. And the data that's so important for us to show you, if we had a key reversal in the euro, guess what? Pretty chances are you get a key reversal inside the U.S. dollar index. Well, that's what we got yesterday. What else do we have out here that still hasn't been taken out just yet? 89.25, or right around that range. What is it, 89.25? Well, I need to put the weekly chart. It's going to be easier for you to watch us, even on this new HD TV that we've got here at TFNN. And oh, my goodness, is that a beautiful thing? But if we take a look at the highs back here from November 17th, the week that began November 17th, 2008, that's the high that I'm using right now as our guideline of 89.25. It actually could go a tad higher because you've got your swing point from March 2nd, the week beginning March 2nd, 2000. No, I'm sorry. Was it March 2nd? No. It was March 2nd, 2009, 89.71. So it's really 89.71 that becomes the key level. If that gets launched out there, U.S. dollar index is going to run higher. That euro, I can guarantee you, is going to run lower. But at this stage here, we've got natural areas of support. Well, in this case here, natural area of resistance. So we go take a look at that Great British Pound. Let's go do that for... Let's go do that and see if it's been able to take out the hammer candle out here. This is the weekly chart. Sorry about that. Let's go switch over to the daily chart. It did take out a weekly hammer candle, but that's not the one that I was looking for. I'm looking for this one right here that takes us back to November 14th. So for Don in Sarasota out there so far, he's in this long Great British Pound trade that's been frustrating because all that it's been doing is moving sideways and continues to make that motion here today. In that low, if that low gets taken out, 1.5589, that offers lower price for sure. Now let's go take a look at the hard metals out here. Let's go take a look at Goldilocks. Now in the case of Goldilocks, let's go switch over to the current contract. Let's go switch over and let's put this also. Well, here's the daily. Whoops, that's natural gas, which I'll do. Had a couple of emails yesterday. I didn't see them till after the shows, and so we'll cover natural gas here this morning. Now, what do we know about Goldilocks? This is the January contract for gold. We know we've got that nice little trend line, two trend lines, but the yellow one is the cautionary one that we want to pay attention to. That has kept gold in check on any move higher out here. What we have seen here this morning, we saw a move lower in gold. We saw that emotional spike quite a bit lower in gold. We saw gold get down to a price point of $11.86. If we just simply take a look at the action of this wide-ranging bar right here, let me actually do this and get a couple of things turned off. Let's turn off these 1.272 areas. Let's turn off the 1.618. There we go. All right, so if we're just taking a look at the retracement level of the bar from December 1st, from Monday out there. Big move inside of gold. If we take a look at from the bottom to the top of that session, we'll see that at 1190.70, that's your 0.382 retracement. Folks, if the 1190.70 area holds, remember, you try to buy a pullback, right? If in fact this area holds, what you're going to see, I don't know how many of you actually saw the Orion liftoff this morning at 7 o'clock. What a beautiful thing that is. And what an experience, when you are actually there watching a space shuttle take off. I've had the fortunate opportunity to see that. I've had the fortunate opportunity to be inside the vehicle assembly building right there under, where you literally can touch the actual space shuttle. That was many, many years ago. I've got a lot of great stories, got a lot of great true stories that would scare that. I would actually, you'd have to say, I might not want to be an astronaut. Maybe things are better now. But that's not the story I want to tell you. What the story I do want to tell you right here is if the only retracement that we see out of gold, no guarantee that that's what's going to happen, but we do know the area we're watching. If 1190.70 is basically the area that holds, so what you're about to see is gold as the Orion spacecraft version takes off. When it does take off out here, it's launching pad. So right now, I think it's just on the pad, the launch pad, getting refueled. Oh, why didn't that work out there? That's now. Oh, maybe no. That could be the yes. Maybe I actually haven't had to use the same swing point with this A/B equals CD tool. Let me see. Yeah, how about that? That's pretty weird. Okay, we'll have to do it a different way out here. Let me. I'll do it a different way on with different application. That's all. Let me pull over the gold contract right here, and I'll give you what that A to B equals CD pattern is to the upside. Well, actually, let's do this. Actually, now that I see it, let's take a look at really well, there's going to be two ABCD patterns out here. This one, which was what I was trying to draw in there. Oh, my goodness. I'm having some data issue here. Okay, well, we'll always go to plan B. Look, it's pretty simple. Let me do the larger one. Well, let's do the smaller one. You got 1141 up to a high of, so we'll just do this mathematically, 1141 to 1221. So what are we looking at? We're looking at $80. So we can add $80 to this morning's low, 1186. That would take you to what, 1292. Yeah, 1292. That's potentially the small one out there. In fact, I would have to say it's the small one. In fact, you would see more than an $80 move out here inside of gold. Are we there yet? No. Can gold pull back even further? Hey, if we put the gold contract on Tommy's 10-minute chart out here, let's go do that, right? We're going to probably see a very high volume bar out here. So when Tom and Daryl do the Nadex platform here this morning, if gold continues to trade inside this bar, here's that 10-minute bar. You got that big spike lower with volume. Volume there was 27,000 contracts. You're trading inside it right now. Of course, what you know is Tom would say, hey, that low is going to go get tested, 1204.50. And maybe that is the case. It goes and it gets tested with lighter volume, rejects it, and then moves higher. Guess what? We have that same set of circumstances out here. We still would have the same set of circumstances where this 1190-ish, 1186-ish area would actually hold inside of Goldilocks. So we'll go see how that plays out. I mentioned natural gas out here right now. It's up 4 pennies. If we take a look at, no, not at the 10. Well, okay, we've got the 10-minute contract out here. Let's still take a look at natural gas, which has gotten the kibosh out here. But if we take a look at what it's actually done here recently, there was this wide-ranging bar, no real volume behind it back here this morning at what time? About 6:40 a.m. And a nice wide-ranging bar. Prices moving back to that area. That low is $3.68 out here. But that's on the 10-minute chart. Let's go take a look at the daily chart. Get a feel for what's going on out here. The feel for what's going on out here is not necessarily good news, and I can't tell you why. But what I can tell you is what the sellers are doing now. If we take a look at natural gas, and we look at this is the January contract. We look at the November 10th swing point out here. That swing point had 101,000 shares, and that was taken out with 157,000 shares on November 20th. Typically, that would have been a confirmed, or it was a confirmed A to B equals CD to the upside. But guess what? The buyers and sellers the sellers had something else in mind. And now what we're seeing is an A to B equals CD to the downside. Not A to B equals CD to the downside. Well, I see what I did. I turned something off there. I got to go get back to the A to B equals CD tool because I changed that for something I did for subscribers this morning. So it's beyond the 1-to-1. So put that in there. I'm just putting that in. Where's the second level? 1.272 as we take a look at our Fibonacci expansion, 1.618. So just put all these levels back in the system, 2.0. And there we go. So right now, you can see we've got natural gas. It's traded down to the 1 to 1.618 A to B equals CD to the downside. No bullish reversal signal or anything along those lines that says price could continue lower. Right now, all you've got is a little bit of an inside day. 877-927-6648. This is Steve Rhodes, TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 39, S&P up a point and a quarter, NASDAQ up 5, Russell up about 3 points, King Dollar up 485 ticks as we speak right now. Let's go take a look at ticker symbol TPLM, one of our requests inside our Tigers Den. This is Triangle Petroleum Corp. We're going to do this and take a look at it going from daily to weekly to monthly out here. Now, if we take a look at the daily chart, there's a B point, a swing point right here from October 15th. That October 15th swing point at 4.9 million shares. When that was taken out, it was taken out with 3.5 million shares, but it was a gap down. It was really a wide-ranging bar out there. So nonetheless, the pattern that seems to be unfolding here from the A to B equals CD standpoint, if we take a look at the A point out here, I'm just going to come back and I'll use the high, it looks like on maybe September 3rd as our A point. Our B point's going to be this low on October 15th. Very shallow retracement, only less than a 50% retracement. We can see that price is now below the 1-to-1 level, which would have been $4.06. This says next stop on the way down is about $2.60 unless we see some kind of bullish reversal signal. That is what the daily is showing us. If I were to try to identify a expansion of swing points, let's go do that. That way we can it can help us to set up our potential butterfly pattern out here. What this would be saying is you're really right about there right now. So you're at the you're close, 1.618 expansion of the major set of daily swing points there we're looking at is 355. So if we are there, what this would say is you would see some type of reversal signal or candle here today. Don't know how it's going to trade, but that is ticker symbol TPLM. That's what the daily chart shows. We've got to switch over and take a look at the weekly chart on this. The weekly chart, shows one set of swing points. That's a 1.618 expansion. What that we were looking at. Let's take a look at the second set of swing points out here just for expansion. See if we're beyond the 1.272 level. Probably would need this to be different colors, but let me see here. I'll just turn one off. That's what I'll do. There we go. So now let's see. Where's the 1.272 has got you at about 277. So this is at an important area on the weekly chart for it to hold. Let me pull back on the weekly, see if I can find any other things out here. It's been coming down with volume as we go back to the left-hand side of the chart. It's trading into this swing from October 3rd, 2011. The low there is $3. So $3 at that low. To see that get tested with less than 2.7 million shares, that would be ideal. That's not going to happen this week because you're at 16 million shares out there. That's what the weekly chart is saying. The monthly chart for this equity, we can see just in a tight consolidation range at the bottom. This thing here had traded at one point in time up to a high of 72.40, or looks like it did. It's hard to say. This could have just been a shell buyout or something like that. So we really won't. Without any kind of volume back here in 2006, I'm really not going to pay attention to that because it really didn't start trading with any kind of volume until about 2010. So this could just be a reverse merger of some sort, and they just simply bought the shell, and a good reason why they could be doing that. Well, yeah, because it was traded at $1.50. It was trading at $1.50 or so. Down here actually got down to even 66 cents. So, yeah, probably the left-hand side of that was nothing more than some type of reverse merger, and they bought the shell as opposed to taking it public from the get-go and spending the $500,000 that it cost to do that. What the monthly chart here shows us is a nice real key reversal session out here on October 1st, 2011. That is, we looked at the key reversal session back on the U.S. dollar index on a daily chart. Hey, look, folks, on a monthly chart has way more meaning than a daily chart does. And so this says that's that $3 mark out there. So I would say if you're going to dip your toe in the water, watch $3. You're at $3.69. Watch right now to see if there's a reversal signal because of the 1 to 1.618 Fibonacci expansion, as well as the A to B equals CD down pattern. Otherwise, and I would also say at $3, look for some kind of daily reversal signal. So that is ticker symbol TPLM. That's taking a look at. That's really what you ought to do for every chart, anything that you go ahead and make an investment in. Make sure you look at the daily. Make sure you look at the weekly, the monthly, just to get a feel for what's going on out there. If we go over and take a look just during this next minute here, go take a look at the NASDAQ, see what the NQ is doing. The NQ still at a potential peak G out here that was formed several days ago, back on November 28th. That high has not been taken out. If that high gets taken out, yeah, it recycles to a fourth wave up, but I'd also have to say taking that out, that seventh wave up on the daily basis, that'd be pretty bullish. I'd have to say Santa is in, no cold, no reversals, no buying the dip, no way it's going to let anybody in. It's just saying hop on board the train out there. That's what the NQ is showing. If we take a look at the Dow, which has been super strong out here, which refuses, and I do mean refuses, to go down. Today it's spiked higher. In recession. It's in its seventh wave on the way up out here, so no reversal that truly can't come from the Dow today. That doesn't mean it can't reverse it from lower. But in any event, this is Steve Rhodes. This is TFNN. Right?
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 39 points, trade at 17. S&P up 3, trade at 2,075. Composite up 13 points at 47.82. Russell 2,000 up $4, trade at 11.76. DAX, how about this thing on fire? Up 179 points. The FTSE up 59. Let's go chicken on those in a moment. Gold down $10. Silver off 19 pennies. Light sweet crude off 67 cents out there. Leading the charge to the upside, Alta Salon Cosmetics having a decent day out here, up 6%, up $8 and change. The direction shares, FAS, for the financials up 2%. 2% up 260. Franciscus Holdings up 20%. Holy schmoly. That's up 241. Goldman Sachs up 218. No wonder the XLF is moving it on fire here this morning. Synaptics, SYNA, up a couple of bucks as well. To the downside, you've got Google leading the charge off $4. Five Below is below almost $5 right now, down at $37.99. Big Lots off $4. Global Partners down $2.63. Amazing Amazon off $1.57. What amazing service those guys have out there. They have got their shtick together out there, no question about it. EOG Resources down $1.29. Duke Energy off $1.17. Hey, let's go check in on the DAX out here and the FTSE. The DAX here right now trying to take out resistance of a large consolidation pattern. This consolidation pattern, it's huge. I think it's like 1,000 points. Is it not something like that? I mean, it depends on what you want to use for the consolidation area. No, come on. No. Well, I'll put on a weekly chart maybe. But let's first take a look at the daily chart. That's what I'll do. I'll put on a weekly chart. If we look at the swing point back here for the DAX, what I'm using as the consolidation high in essence is going to be the swing point from June 10th, 2014. The DAX had traded up to 10,033.74. We can see that area has acted as resistance. It was tested back in June 20th. It's a daily chart. It was tested back July 3rd, July 4th out here. It was tested again back here on December 2nd, tested again yesterday on December 4th, and it's being tested again here right now. That is a significant area of resistance. You see the DAX close above 10,034 today, and not at 10,035, for goodness sakes. But you see it close above. Hey, let's just make it easy. Close above yesterday's high, if you can get up there, 10,083 out there. Then you're seeing a big breakout for the DAX. That would be pretty darn bullish out here. As far as consolidation pattern might go, yeah, I can easily see this is where the consolidation is. How about that? If we take a look at the DAX has a breakout session. It was this little gap up that took place between the week ended September 9th, the week beginning September 9th, and the week that began September 16th out there. So that is the area of that's how about that? That is your area of 85.78 to 10,033. What is that? 85.95. That's 1,500. 1,500 move, 1,500 point move out there, just about. So that says the DAX would move up to about the 11,500 area if, in fact, you can take out 10,033. That is what's going on inside of that equity. If we go take a look at the FTSE, see what the FTSE over in the UK is doing. She's up 55 points as we speak right now. This is the daily chart that we have on our screen. The FTSE looks a whole lot like the IWM, a little bit better from the standpoint that in the Russell 2000. The FTSE here really on a weekly basis not doing a whole heck of a lot. Just pretty much trading sideways. Closed out the week on November 17th, closed at 67.50, closed out last week at 67.22, 30 points, and right now you're trading at 67.34. You're trading really right inside that range. So the FTSE nowhere near the type of strength that the DAX is showing as we speak. Of course, if we do go take a look at the IWM, we'll stay on the weekly chart out here. Maybe, only maybe, is this going to be the first week out here where we see something other than a doji candle out here. If we get 5 dojis in a row, man, I'm going to have to go back. And you talk about records, then that would be the that could be a record. This is a weekly chart that we're looking at out here. Yeah, I know they're out there. You just got to look pretty hard. But as you can see, and take a look at the weekly chart here for the Russell 2000, the IWM, the ETF there, you can see just simply 4 dojis in a row. The last week's being the gravestone doji out there. What's my actual expectation? That this week will be no different, and we'll see it close somewhere around 116.69. Somewhere right around that range. Now, if we don't, we don't. What you want to be watching for inside the IWM is what happens if it actually closes inside the June 30th low. That's your weekly swing point. That's 117.83. That has volume of 146 million shares, and you're a bit light. You're at 129, but this usually does, 30 million shares? So you'd be coming into that swing point with volume out there. So a close inside of 117.83. That says the likelihood is that you would go test 120.97. That would would say, hey, all those dojis, the market was tighter, but it has recharged and it wants to go attempt to take out those highs. Now, those highs, just like we looked in the DAX, those are muy importante because that's got about 135-point move inside the IWM. That's a $13.50 move to the upside when and if the IWM takes out that area. And that's the highs somewhere right around, we'll call it the 120.58 type range. That's really the top, in essence. I think it's right around there as the top of its consolidation box. That's what's going on inside of the IWM. Okay, so we've covered gold. In essence, we covered silver just simply by taking a look at gold. If we take a look at light sweet crude out here, it's the trade that I just recommend just simply staying away from. I think there's too much politics, too much other stuff going on out there. I mentioned this inside the Tiger's Den. You see the folks come on to CNBC and Fox Business News and Bloomberg out there, and they all show the correlation. Well, let me see if I can actually go find it. They all show the correlation chart between light sweet crude and the S&P, and they talk about that like it's so unusual for the two to diverge, and that it's oil that paints the way. And I can tell you, BS. That's nothing more than before Steve information out there. You know, if you go do the work yourself, you'll find out that it is really nothing more than BS out there. Now, if I got to find the chart, I got to prove it to you now, right? I'm just looking. I think I've got too many correlation charts inside this thing here as we speak. So I have to try to clean that up over the weekend or maybe early next week, something like that. But come on, pop up on my screen for me, would you? There's natural gas light sweet crude. This is with the dollar. I don't think this has it. Now that's just got the U.S. dollar index out there. Here's my gosh. Well, I can just do it. What the heck am I talking about? Let's just add the S&P. So let's just what you should have said. Hey, Steve-O, what the heck? Why don't you just add the S&P? Oh, I didn't want to do that. I wanted to add a symbol. Just add the S&P 500 to your chart out there. So good thinking. Thank you for jumping through there. Let's do the ES Mini simply because. So I've got all the data. Let's make should we make it a different color? Should we make it white? Should we have red, white, and blue on the chart out here? I think we should. I think we ought to at least decorate the chart. I mean, this is our palette, right? So why don't we just simply try to decorate? We'll change our line color to white, and then we'll make it nice and thick out here. And there's the U.S. Stock market. And so here you've got light sweet crude. That is up at the top. So we can certainly see a divergence here. Let's go ahead and get a line tool. We can draw some additional lines on here. Let's use the green. We got green. Let's really decorate this, right? So here, if you take a look at the ES Mini, clearly been moving higher. From this swing point, if we take a look at light sweet crude, you can see that it's been moving lower out here. And look, there is a correlation between what the U.S. markets do and light sweet crude. But really, if you put this on a longer-term basis, you're going to find time period. And the real thing is, when I put this on the weekly time frames, you'll see that light sweet crude is had been consolidating. Here, I'll just have to do it this way, although this is going to show up as a let me turn that off. This is going to show up as a blue line out here, but it just really helps to prove the point. Light sweet crude had been in a consolidation box basically from about this level right here. Here's your consolidation. Just simply been consolidating for a long, long time. But if we take a look at the ES Mini, nowhere near the case has this thing been consolidating. This thing, just had been. It just simply had been moving higher. So the correlation, in my opinion, doesn't exist. But here's the real point. Here's really what I said inside the den. I wouldn't worry about the mere fact that the S&P is moving higher and that light sweet crude is moving lower out here, because this is the weapon of mass destruction right here, light sweet crude. And that's what's going on over in that's what's going on between Europe, United States, between Saudi Arabia. Everybody is on the side of saying BS to Putin and his stuff, and so they're just and so that's what's going on. This is a controlled substance here, this black gold Texas tea, light sweet crude out there, and in exchange, why would the Saudis do that? The Saudis would do that because the U.S. is bombing the heck out of, or trying to bomb the heck out of ISIS, right? And they can't show that they're truly actively involved with that. So this is the quid pro quo out here that's going on in the marketplace. So what can they do? What they can do is they can go ahead and they can help drive down the price of light sweet crude and really put which helps out Europe, helps out us as far as tightening the noose around Putin's neck. And so do you really want to get in the middle of that kind of a trade? If I can't prove that I'm right. I'll say that the story will come out years from now that will say that was the deal or that was the story. Maybe it will, maybe it won't. That's my hypothesis. I'm sticking to it. It was a hypothesis that we discussed way back here in June. So it's the same hypothesis that in essence. Now, I didn't have the Saudi piece. I couldn't figure that out. But then at that stage, I can't recall when ISIS actually truly reared its head out there. But that's how all this stuff was engineered, came together. And I would just say, if you're going to go trade light sweet crude, buyer beware out there. I think you're up against things other than just natural patterns out there. It's like why fight the Fed with we all know what QE can do, right? You didn't know what QE could do at the beginning of QE when things were coming. Or maybe you did. Maybe you did. I can say I didn't know that. But we certainly know now, and that said, hey, some of your other patterns that you're trading out there, maybe they're not going to work. Hey, as long as I've got this chart up on the screen here, Don in Sarasota, maybe he's listening. If you are, good morning, Don. He was calling about soybeans yesterday. And we were taking a look at soybeans. We were taking a look at a couple different patterns out here. One was the potential A to B equals C to the downside. Now, the caution sign yesterday was this hammer candle that had formed on December 3rd. And yesterday ended up being a follow-through session out here. So this says if you are still short soybeans out here, make sure you have tightened your stop because even though you have not completed, it's not necessarily a buy signal because you haven't completed a pattern out here with regard to either a retracement. Well, you made about a 0.618 retracement, so close enough for a bluff. 983.60. No, 983.6 versus 978.5. So you're close enough. But the whole point is that they had a hammer candle, oftentimes a one-day reversal signal out there. You saw some follow-through yesterday. You're seeing some follow-through again today. This could be a counter-trend rally out here. Not seeing anything in the way of volume that really is going to give you any kind of information inside of soybeans. But I would be careful if you are short soybeans at the moment. Only from the trade. Just simply tighten up your stop. Don't let it run away from you. All righty, let's go take a look at some things here that are moving in the marketplace. Obviously, I went off on a tangent there, but I think it was a pretty darn good tangent inside of light sweet crude out there. Let's take a look at some things that are moving and grooving out here. Let's go take a look at some hair gel. Let's go look at Alta Salon out there. That is an amazing store. I've only been in it one time, but I got in there and I was confused because I was confused to say, gosh, there are a lot of people in the shampoo business out there. So, of course, you think about it. That's pretty good high-margin business, isn't it? In any event, you've got a move to the upside. You've gapped up to the upside. In fact, Alta Salon, this had a big move back here on the trading session of September the 12th, 9.5 million shares to the upside. If we put this on a weekly chart, Alta Salon is back. I imagine, I haven't looked at an IBD here for a while, but I got to imagine Alta Salon is back in the saddle again. Alta Salon right now is attempting on a weekly chart out here to take out its swing point high from November 18th. That high was 132.72. Went from 132.72 down to that little doji weekly candle January 20th down to a price point of $80. That's a pretty good move. 132 to $80, and now it's made its way all the way back. It's had several signs of strength on the way back. One could say it's going against the supply line out here from December the 2nd. I say, too many signs of strength on the way up out here. Buyers absolutely in control, and if it can take out those highs, 132.02, next stop up, I just look at an expansion of swing points out here for Alta Salon. I'd have to say the next level on its way up would be to the price point of about 146 and change out there. That's ticker symbol ULTA. We got Northrop Grumman out here. Was Northrop Grumman, were they part of the Orion space shot this morning? I would imagine they are. I would imagine that I don't know if they are or not, but I imagine that they are. And so right now they're having a little bit of that Orion liftoff spaceship action out here, on the weekly charts. Up this week with 5.8 million shares out here. It's at all-time highs. So this is looking pretty good. Let's take a look at a daily chart, see what it did. Lockheed Martin for, thank you, Z. Northrop Grumman, they had to make some kind of parts. And then we'll go take a look at Lockheed Martin. If you take a look at the November 28th swing point, of course, that that was the Friday ago after Thanksgiving, and that high 142.51, only 800,000 shares. You're at 220,000 shares in 19 minutes of trading. Of course, you've got probably about 1.6 million shares. You take that out, you've got a small A to B equals CD, you've got large A to B equals CDs on the way up. So Northrop Grumman looks like this certainly wants higher price. Let's go take a look at Lockheed Martin, see if they are dancing in the streets out here right now. LMT. The stock chart doesn't look as good as Northrop Grumman. My apologies out there. Brain fart, little brain fart. This is Steve Rhodes, TFNN.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Big volume behind the financial sector inside the S&P 500, the XLF. And I think the XLF is the second or third weighting structure. You got the XLK, XLV, XLF, the top three weighting structures out here. You got volume today so far of 8.3 million shares. Yesterday it did 16 million shares. We've only been trading for 24 minutes out here. So you've got a big volume day. In fact, probably ends up being the biggest volume day to if this type of volume were to keep up, biggest volume day since the move on October 23rd of 2014 out there. Mostly being, I can't say mostly, but certainly somewhat being powered by Goldman Sachs. Got Goldman Sachs up $3, up 1.6%, and Goldman Sachs taking out a swing point here from November the 11th, 11/11. The craps table out in Las Vegas that had 1.6 million shares. You've done 825,000 shares already. So Goldman Sachs poised to strike and continue its move higher inside the northerly direction out here. Now, here's the interesting thing. Let's go take a look at it. You got the Dow's up 40 points. And as I take a look at the summation index, boy, it's right on that zero line. Right on that zero line. Now, earlier, when the Dow was up about 27 points, 30 points, it actually was just slightly negative. As long as the bulls can keep the price oscillator above zero, hey, price can keep moving higher. The New York Stock Exchange, it's struggling. Slipped into bearish territory yesterday, continues to be here. So we've got just simply some divergence out here, but every time the sellers ought to be able to take control, they just simply have failed miserably out here. I do mean failed miserably. You've got the summation index inside the NASDAQ composite that has that turned back to green yesterday, and today it's on green. So you have to say money on green if you were playing the roulette wheel inside of Vegas today, and you were betting on the NASDAQ composite as we speak right now. I have a request here that says, can I take a look at UVXY? That if we let's go first take a look at the VIX index out here. The VIX index trade out at 1205. So she's traded down a bit lower. That's headed in the right direction. The market's moving higher. VIX hidden lower out there. The UVXY is one of those instruments that if you're going to trade that, you really need to be sitting at your computer. In my opinion, you make sure, for goodness sakes, that UVXY. That you've got a bracketed order in place out here. So it's trading at 18.13. I don't have any real signals here to tell you to go long, short, or otherwise. I'm certainly not. You're not going to go short. You're looking to buy this thing as a long. You know, I'd have to say you could use your market profiles. If it gets above 1960, it's traded at 18.13. Maybe you got a shot at 2087 or 22.13 out here. I don't see it as a great trade between now and the end of the year. Between now and probably early January, you can take a look at that high out here from October 16th, but we're not going to see that. It's not going to get into that $56 area. You're trading at $18. I think there's probably better trades for one to take a look at than the volatility. Now, that's not to say you can't trade it from a short-term standpoint, but right now I just don't see it. You got the Japanese yen. That thing has taken off to the moon. This thing now trading at 121.22. We know at 122.36 is your 1 to 2. A to B equals CD to the upside. Looks like 122.36 is where she is headed to. If we take a look at that euro-Japanese yen, also headed to the moon. It's trying to take out the high of the trading session from November 20th. That's at 149.13. Of course, what each of you know is that this currency pair tracks the U.S. stock market better than any other currency pair out there. When this is moving higher, it says the carry trade and lots of liquidity is in place out there, and that is what we are seeing at the moment. Dow up 41, S&P up 4, composite up 15, Russell up 8 points. Folks, thanks so much for being here this week. Hope you've had a great week. Stay tuned. Our man Tom O'Brien, Daryl Martin, they're up next. Then we got Basil Chapman. We got it's Friday. That means we got Nico and Paige, Daryl Martin, David White, Tom O'Brien show from 3 to 5. Have a great week, folks. Great weekend, I should say. Forward to seeing you Monday. Take care.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.